webinar.
Recording in progress.
Hello, hello.
Yeah, we can.
Hello.
Yes, I'm gonna start the session now. Good evening, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session
Good.
and introducing today's speaker.
Hello.
Okay, I'm sorry about that. I will be hosting today's session and introducing today's speaker, and I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax. Represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions by chat. The presentation itself will last about 20 minutes plus 20 to 30 minutes for you to ask questions. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information that you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, the session will be recorded. The topic for today's session is everything you need to know about tax payment plans, installment agreements, and offer in compromise. And the tax expert for today's session is Jared Smouth. Jared has been a CPA for over 18 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, information technology, management, pension, tax, and other services. He is a firm believer that taxes are important for our government to function. However, he does not believe we should be paying any more than we should and enjoys helping his clients find ways to optimize their tax situation. With that said, introducing Jared's Mouth.
Good evening, everyone. I'm grateful to be with you tonight to talk a little bit about offering compromises, give you a brief overview of that program and the process that is followed to get your tax debt reduced, hopefully. There's my contact information if you'd like it. So, first of all, question is what is an offering compromise? An offering compromise is an agreement between the taxpayer and the IRS to settle a tax debt for less than the full amount owed. The program has three goals. Is to achieve a resolution that is best interest for both taxpayer and the government, is to collect what can reasonably expected at the earliest possible time and allow as well as secure revenue that may not be collected through other means by the IRS. Like any creditor, the IRS wants to collect what's owed to them as quickly and as efficiently as possible by not wasting resources to collect debts, to collect less debts than what those resources cost. So it's an acceptable business practice by the government to resolve these issues through negotiations and compromise. If they don't think they're going to collect anything, they're not going to waste a lot of resources. But if they think they can get something, they're going to do what they can to get as much as they can, but also working with the taxpayer to negotiate something. So additionally, they also want to help the taxpayer get a fresh start. The IRS does have this bad stigma, and it's out there that they're just horrible people, but they're not. They're people like you and me, and they really want to collect what they can, but they want to help us as taxpayers. Believe it or not, they do. Now, you may come across one or two once in a while that aren't, and they're crotchety old people. But I think for the most part, they're well-intended individuals who want to do what's best and try to help us all. But it only succeeds if we're able to work well together and everybody's does what they can and and does what needs to be done, and the IRS makes prompt and reasonable decisions. So there are three types of offers. There's the doubt as to collectability, doubt as to liability, and effective tax administration. I'll briefly discuss each of those. Doubt as collectability. That's when taxpayers are unable, after financial analysis, to pay their liability in full. It's the most common type of offer that is out there. And the offer that is given by the taxpayer must equal or exceed the taxpayer's reasonable collection potential in order to be acceptable. And reasonable collection potential is basically big words that says, what can the IRS expect to get from you? Doubt as to liability is that the taxpayers disagree to what the IRS says is owed them. If it's offered right at examination after they're received, and it should only include the tax years or periods in question, and liabilities for other taxpayers should not be included in this offer, and it's submitted on a different form. Effective tax administration is situations where the taxpayer owes the amount and they may have enough assets and income to pay the liability in full, but due to special circumstances, requiring full payment would require an economic hardship or simply be inequitable. Two options to file under ETA. If the taxpayer is paying more than the full amount offered, it would create a financial hardship. So they have the money, but if they paid it all in full, they would basically be penniless, or close to it. Or the amount offered is based on the taxpayer's exceptional circumstances other than economic hardship. An example shared here is you paid your taxes through a third party administrator, like payroll administrator, but that person who took your taxes and was supposed to transmit it misappropriated them. It wouldn't be right for the IRS to come after you to get something you've already paid. Example of effective tax administration. However, the IRS does want to make it clear that an offer is not the first option. They're going to look at all these other options and recommend that you look at these other options first. The full pay option is only if it is evident that the taxpayer has the ability to full pay and there are no other circumstances for DATL or ETA. So they look at your situation, they find out you have the money, you have the income, it's not going to create an economic hardship, they would expect you to full pay. Or they also may expect you to borrow. They suggest this method if you have the ability to borrow for the full pay amount, including penalties and interest, and that it wouldn't create a huge economic hardship for doing so. They look at your assets and whether you can liquidate some of those assets to be able to pay your taxes. They're not gonna, if we're sitting on a garage full of luxury cars, they're not going to think that we should just keep all those cars. They're going to want to go ahead and get us to pay, liquidate some of those assets and to pay them. There's also finally an installment agreement, I think, which is also most common, where you can pay it off over time. You basically have a payment plan with the IRS to pay off what's due. And if they don't think they can get it within the achieved collection statute expiration date, which normally about 10 years, they want to be able to try and get as much as they can during that period of time. Penalties and interest do still continue to accrue during this period. So how are offers calculated? They look at the net realizable equity in your assets. They look at the quick sale value of what you have, less the amount owed to secured lien holders, and if applicable, any exemption amounts. The quick sale value is similar to fair market value, but a little bit less. It's like if you were just to have a fire sale and sell off your stuff and not go to auction or bid or try to wait it out and see who can give you the best price for your assets. It's what can you get for it now, today, quickly. They look at your future income, an estimate of the taxpayer's ability to pay based on analysis of your gross income, less necessary living expenses for a specific number of months into the future. And then they give you some allowable expenses. Everybody, we got to survive, right? We got to be able to live. We got to be able to take care of our family. We got to be able to take care of our businesses. And so allowable expenses are those expenses that meet the necessary expense test. The expenses that are necessary to provide for a taxpayer and his or her family health and welfare and production of income. There's two types. The allowable living expenses based on it's a standardized kind of expense based on national and local standards, where you're living, what's your family size, and what they would give you for the necessities, basic necessities, and the out-of-pocket expenses for healthcare, housing, utilities, and all those kinds of things. And then if you have other necessary expenses, health insurance, childcare, conditional expenses that may be based on your individual circumstances. Not everybody has student loans, so if you maybe have two student loans you need to pay, or if you're delinquent in other taxes. So there's a standard where you're kind of treated like everybody else, and then there's a piece where you're treated by your unique situation on the expenses that they're going to allow you to deduct out of your income to come up with how much they feel you should be able to pay. With the offer and compromise, there are forms you need to fill out. These are the forms here. The 656 booklet includes instructions in two different forms. There's a application fee that you may be able to waive if you meet certain income limits. And then with the initial offer payment, if applicable, it could be you go through this analysis yourself. You figure out how much you can offer, and you make an offer. They look at that offer and they either reject it or accept it. And your offer could be 20%, could be your first part of a particular payment. You may qualify to waive these payments based upon your income. Low income certification, it only applies to certain initial individual offers. There is a pre-qualifier tool available at irs.gov that will assist you in determining your preliminary offer amount, and if acceptable, it'll help you kind of weed through some things and avoid rejection based on technicalities and other things that you may not be aware of. So here's the life cycles, basic seven steps to the life cycle of the application. It's received. You got to mail the offer in with your original wet signature. There's no electronic file availability. Depending on where you live, you'll either send it to New York or Tennessee, and then they go through the processability determination. They look at it and they check to see if it's processable or not. What they mean by that is it complete? Is the application complete? Does it have everything that it needs to be before it even can be considered? If there's things missing, if there's the fee's not given, and you didn't qualify to have the fee waived, that's they determine whether it's processable. If everything, all the dots are, all the I's are dotted and the T's are crossed to be able to send it on. And then it sends to the case building. Process examiners will load it into different queues depending on the type of offer. It gets into their system, and so everybody else that helps with it can have access to the information and do their part. There's the offers and centralized, offers and compromise, offers and field, offers and compromise, the two different things. The centralized OIC is typically for individuals and things and people, taxpayers that fit into that bracket. Offers and field compromise are typically businesses and other taxing entities, taxable entities. Then it goes through the investigation, and then it goes through closure. And the process, the time that they want to the amount of time is dependent upon how quickly things are determined, whether everything's complete, and whether we've given them enough of their information. But it's about 6 months or so, could be longer. Helpful hints for going through this process: stay filing and payment compliant. It may sound counterintuitive, but what you want to be able to do once you are at a point, you realize you got into a situation where you couldn't pay your taxes, whether it was poor planning or circumstances beyond your control. Most likely it's poor planning. I have clients that are starting out in the businesses, being self-employed, and they never really understood the tax ramifications of being self-employed, and so they didn't plan or prepare very well. So now that you're aware, the IRS expects you to make business decisions and run your business to fully take care of your tax obligations. And so you want to be able to make sure that you're going forward, you're being compliant, because they don't want to have this continue to be hanging over your head and not be at a good place when you start negotiating something less than what you are owed or what you owe.
Hey, Jared.
Yes.
Jared, can you hear me? Do you mind if I jump in just for a minute, then I'll let you pick it up? I got to jump on another call, and I wanted to have this talk with you, if you don't mind. Is that okay?
Go ahead.
All right. I'm Kelly, the CEO of Tax Resolution Help Center, and Jared's my guy here, the expert on OIC, offer and compromise, and payment plans. And this came up yesterday, Jared, in a discussion I was having, and I thought, well, let me have this discussion with you, and we might as well let others hear about it. And it kind of relates to a common denominator among all different tactics utilized by you and other experts in negotiating favorable payment arrangements with the IRS, whether that be not collectible to a simple payment plan. And that common denominator is a budget. You hit on it with what were you calling it? The allowable and other approved expenses, right?
Right.
Would you agree that in all of these, across the board, the fundamental foundation of this is a budget that doesn't meet our smell test or a family smell test, but it's got to meet the IRS smell test, right? Do you think that's a fair statement?
Yes, absolutely.
So isn't that kind of core to, I mean, one reason why I wanted you to do this type of session is that the audience doesn't know this, but Jared did some work with another company in the Mint project, and the core part of that was doing heavy duty budgeting type analysis and work. And so it was just an easy thing for you to step up. Don't you think that's been really helpful for you in kind of understanding and putting things together like this?
Yeah, quite frankly, what gets us into these situations um, is sometimes, not always, but most times, poor budgeting and being able to stick to the budget. And again, you can't always project. You can't project market declines. You can't project necessarily the economy going south. And so there are those situations, but there always is that underlying threshold of our budgets and our income and expenses and making sure we're managing those properly. Whether you're a business or whether you're an individual or a family, but no difference. You have income, you have expenses, and you have to be able to manage those properly. And the IRS they want to see that. They need to see those numbers. And that,
Yeah. And their definition of necessary, and is there another term we use for that? Reasonable and necessary, or is it just necessary? Allowable and necessary, right?
yeah, allowable, I think was the term.
Is way different than most consumers. And the thing that I think is helpful is the IRS can't force you to break contracts. So if you, I mean, if you, frankly, if you had a contract with your brother-in-law to pay him $500 a month for 5 years for whatever service, I believe the IRS can't say, oh, no, we're going to disallow that. If you have a contract, they can't force you to honor it. Credit cards, they can't force you to not pay your credit card balance. What they will allow, I believe, is the minimum payment on a credit card, right?
Right.
Yeah. All right, I got to jump into this other call, but I wanted to kind of emphasize that part of it because number one, you're good at that, the budgeting part, and I think it's a fundamental linchpin of all of the different topics. You were going to, I know, focus on OIC for a while and maybe payment plans, but I thought, well, the common thing is this, and it's just that it's utilized a little differently with compromise or not collectible or a simple payment plan.
Right. I appreciate you joining us. Thank you.
Okay. All right, Maylene, you can take me off. I'm out of here now. Good luck. Thanks.
Thanks.
All right, thank you. Um, one moment, please. Thank you.
Let me pull up my,
Go ahead. Sorry.
right, pull that back up and we'll finish up the presentation.
Thank you.
That's pretty much it. We have just some more helpful hints to look at. Just make sure you respond promptly to any inquiries from the IRS. If they're going to ask for more information, if they feel they don't have enough, value your property and assets accurately because they will be double checked. Your documents should be current within 6 months of your bank statements and things that they're going to ask for. Explore all collections options. Use the pre-qualifier tool, and do enter everything correctly. And one of the great resources, one thing I've noticed with the IRS, and I'm not going to say I love the IRS, but what I love about some of the things that they do is they have a lot of information they provide. When I have questions, I go to the source. I go to the IRS's website and I look at their things that they provide. I don't read a lot of blogs. I read blogs and things that other tax practitioners will write to explain their understanding of the IRS's rulings and laws. But I go to the source because that's where you need to go. And they have this great website, web page irsvideos.gov OIT, and it walks you through the application process. If you feel confident that you can do it yourself, watch those videos. But if you need help, you are more than welcome to engage us to do that and help you with that. So at this point, I'll leave it open for questions and let May take the reins again.
Hmm. All right, thank you for that, Jared. So yes, we did receive a question. This is from Julie, one of our attendees in Zoom, and her question is, "How willing is the IRS to negotiate on my tax debt?"
Very willing. The whole reason they have this program is to be able to help you as the taxpayer, but also help them as the government get what they can. Now, just a reminder, there's this offer and compromise is not the final, is not the first step. If you're able to fully pay it, take some reasonable loans to pay it off, to liquidate some assets. They expect you to do that first.
Mm,
But if you can't, and you really and they don't think they can get anything else more out of you, then they're very willing to negotiate with you.
mm, I see. Well, that's a good news then. Thank you so much for that answer, Jared. So there you go. We have another question. This is actually from one of our viewers in Facebook. And his question is, if my business owes income tax and I shut down the business, can the IRS or state collect from me as a major shareholder and officer?
Some of the reasons that you establish yourself as a separate legal entity is protect your personal assets from others. And uh, I've not heard of the IRS being able to go after personal assets because of the failure of a business.
Let's see. All
Now,
right.
if you mix a lot of your personal stuff and they call it piercing the corporate veil, where you don't really treat your business as a separate entity because you have so much mixed in personally, then there's the possible argument that it never was separate. So that's why it's important to keep accounts, bank accounts, keep good accounting, keep it all separate from your personal stuff.
I see. Okay, thank you for that answer, Jared. So, just to make a follow up question, so basically, if that's the case, then they have to, somehow, like they have to create separate banks for their business and their personal.
Yes, you absolutely need to keep things separate. Even if you're a sole proprietor or if you're a single member LLC, where you live off that income even if it flows through your 1040 because of just your self-employed sole proprietor, you still need to keep things separate.
All right.
Sole proprietor doesn't protect you really as an LLC or a corporation would. But
Mm-hmm. Okay. Well, thank you very much for that answer, Jared. Now, let me just double check. That was actually our last question for today. Anything else that you want to add?
no, I appreciate the time that I've had to spend with everyone tonight and look forward to helping you in the future.
All right. Well, thank you so much, Jared, for your time. We do also appreciate that. Please take note also with Jared's information. You can message him if you have any questions, additional questions, if you need help. Here's his email and phone number. All right. Well, appreciate also, Jared, for your answers for today. And I hope you have a great night.
All right. You
All
too.
right. Okay, thank you so much. I want also to thank everyone for being with us tonight. And thank you also for always attending in our session. Truly appreciate that. And our commitment is to make sure that we help you reduce your taxes and increase your wealth. We do this with the TriTax method. 3, do it yourself, DIT do it together, and TIA do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. And since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com and please join as a member today for only $19.95 per month. Again, thank you all for attending and have a wonderful evening.